Hey traders, Nick Shaheen here, recapping the week, ending in 11/28. That is Thanksgiving week, a short week, shortened off yesterday on Thursday and shortened on Friday, close early in the U.S. at least. Today, the scoreboard is somewhat negative, even though the Nasdaq was up 0.46% on the NDX, for example, and the triple Qs as well. The Dow was flat, exactly, and the SPX was down 0.25%. Not the low of the day, but pretty darn close. It lost about 5 points. RUT, which is the small caps, and IWM are down almost 1.5%. So recapping the day, it's somewhat negative, especially because in the morning everything was reaching all-time highs. And well, not everything. The ES reached for all-time highs, the S&P, and the Nasdaq reached for recent highs of 43.48 on the NQ, for example, and then gave it almost all up and closed. I mean, it didn't close, but reached almost the morning open lows, kind of like a dome shape. And this is where you can see that statement right here. This is the Nasdaq NQ. You see how it's opened, ripped, and then faded. And right here made the decision to not break down and bounce. Right here it had the option to break down or not, so they bounced a little bit for a decent close. The S&P not so lucky. They reached up and tagged this line right here, which I foresaw coming from this line. I'll zoom out a little bit to see it. And then they did the dome and then lost. Same deal on the small caps right here. They didn't have the exuberance of everything else. They were lagging all day, but they definitely took it on the chin today as far as small caps. Why? You can attribute it to, I guess, oil is 66.9, which I believe that's a new recent low, even if I zoom out, say to 20 days. Yep. OPEC did not cut production, oil prices plummeted, and gold also dropped. So a lot of people lost money, a lot of people made money. Depends on where you're at. Caterpillar lost a whole bunch, but we'll talk about that a little later. Okay, so how about we zoom out for the week? Let's go visit the week indices. The scoreboard for today was somewhat bearish. How about for the week? Okay, finally computer cooperates. So let's look at the Qs first. The most bullish of all the indices, at least the major that I look at. The Qs, we've had 1, 2, 3, 4, 5, 6 weeks green in a row, and this week is also strong. But look at the volumes every week, it drops. The drop in red was on escalating. So this is the fall, escalating volumes. The rise from the fall on dwindling volumes. And this week was short anyway, so we agree that it is a short week and we don't care about the volume being this low, but still the trend is down in volumes. The SPY, S&P, also still green, so 1, 2, 3, 4, 5, 6 weeks in a row. However, indecisive. It's a flat, almost doji-like candle, so they closed it and opened it about the same place. They tried to run it up. They ran against some resistance up here, which is the upper end of the trend. So unlike the Nasdaq, it's not as exuberant. However, I do note the volume again. Now, the story is completely different with regards to the small caps. I like to use them as canary in the coal mine, and they have had indecision for the last 4 weeks. So yes, the bounce was first. It came first. The drop came first. The bounce came first. Only 3 weeks, and then indecision, 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 and indecision. And this indecision is somewhat dejecting because look, they tried to break out. I thought for a second there it was looking incredibly bullish this week, but then they reverted down to the lows of the candle, almost at the low. If I can squeeze hard, I can probably see a little tail. So I'm going to redraw this line. It's not scientific, but it's just in spirit that they're trying harder, but they're failing to hold that effort. So what does that usually bring about? Are we consolidating for more upside, or are we looking at a downside? This is important because this is the market. I mean, it's the basket of 2,000 stocks basically, and I need to listen to it a little bit and see how I can trade next week. Which brings me back to how can I trade next week? Next week is going to be busy with regards to economic reports. We have quite a few things that are important. We have on Monday ISM and manufacturing PMI, all kinds of stuff like that. Tuesday chain store sales in the U.S., which could be bullish given that retail is through the roof. But I expect a good retail effort through the holidays. Is it enough to drive everything up? Possibly, I'm not sure. I mean, Walmart was pretty strong enough today, as an example. And also we have some auto economic news. This hit and miss. I don't know. Wednesday we have ADP. That's pretty important, which comes just before the Thursday or later in the week jobs numbers, the official ones from the government. So there's quite a bit to come out. However, I'd like to point out also to look at the ECB. They have some rate decisions coming up, and they also have press releases, and presentations. So those have been bullish. So I'm torn between the negative end of this week and the bullish prospects of next week. So what can I do? I can do some iron condors to sell some spreads and see if I can have theta work on my side and have time kill some, offer me some decay in the premium so I can buy them back at a profit. And if lucky enough, I would actually expire them for maximum gain. So that's how I would play it. Meanwhile, I would try to hop on some momentum stocks and try to sell some momentum in some of the other stocks. Like today, Tesla got hammered based on the fact that, okay, lower oil means that less likelihood of less appetite to buy electric cars. If you're buying Tesla just because of it's cheaper to run a car, I think you're mistaken. But I guess I can make that argument as well because it's so heavily invested in batteries as far as future is concerned. So, yeah, that would make sense of why they sell it off today. However, it did not close at the low, and it did bounce okay from the low, yet still down 1.6%. Another note's Priceline still haven't found the love. For a second, it was looking to break out, so maybe an iron condor and Priceline. However, this guy runs pretty fast, so that'd probably be the last on my list. Netflix a little weak. Amazon got some love. Now, if you remember in my previous coverage in the last few weeks, I've said to Amazon that if it gets to here, it gets to if it had two breakout zones, and I listed them in my previous presentations. I don't know exactly, but the bottom end of the line is this was my upper target area right here. So today it touched it. So if I was long it, I should have gotten out or booked some, or booked it and re-engaged higher cheaper. So book some profits and re-engage higher if you still think that there's more upside. But I mean, this level right here has been a killer level from before. So if I was long it, which I'm not, I didn't take my own opinion, but I would book some and trail. So that was the just an example of what I would do next week. Try to range bound the market, even though there's going to be a lot of volatility built into it first couple of days in anticipation of the end of the week. So unless the ECB comes out with something, the exuberance may have a pop of sorts. But if there is no actual concrete decision, I think it'll be more of the froth. So yes, a pop, but it's not the one that's going to add 2% in the market to new all-time highs and there beyond. So for example, you can short, not you can't short, but it's feasible that somebody can sell a credit call spread in the NDX for next week or a week out from there with a 2-3% buffer from current prices and still collect a nice probably 10-12% yield on risk. So play it safe, stay away from the current fight the battle with binoculars, as I say. There's no need to fight at the actual battle